Hi, everyone, and welcome to this week's episode of Money Moves. Every Sunday, I go over the most important article of the week, and this week's article is that the economic recovery is faltering. And then I go over each of my investing accounts, starting with worthy bonds. Then I will go over my taxable lending club account, followed by my IRA with Lending Club. Next, I will go over my Fundrise account, which recently broke $1,000 in returns. I will also go over one of the recent progress updates in one of the projects that I invest in with Fundrise. Then I will go over my M1 Retire account, as well as my higher yield savings account. And then I will go over my active option positions, and then I will finish up with where all of my money is, and the weekly progress update. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying the Aston Martin Valkyrie, or if you just want to be part of a well-educated financial community, definitely like and subscribe. Despite the Valkyrie's futuristic appearance, it is in fact road legal. However, it mostly belongs on the track. It has a hybrid drivetrain with over 1,100 horsepower. Only 150 of the original Valkyrie will be made. They are estimated to cost $3 million each. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. As a quick reference, the S&P 500 did gain almost 0.5% this week. In the middle of the week, we had a pretty aggressive dip, but it was very short-lived, and then we recovered to up 0.46%. Moving on to the article of the day, the economic recovery is faltering. They start with a graph that shows the percent decrease in various metrics. So employment ratio and private payroll incomes are down the least, and leisure services is taking the most hit at over 25% down. After a sharp rebound in May and June, the economic recovery has slowed in July. The latest job data shows that the recovery is faltering. However, they expect the economy to regain its footing, forecasting a 5% rise in GDP for 2021. However, they state that the unemployment rate will be around 10% at the end of the year. Personally, I have mixed feelings on the 10% unemployment. I understand that we are continuing to improve, but 10% is still pretty ridiculously high. They say that the risks are still very deep and that incomes are falling. And with this pattern on the horizon, households and businesses are too leery to make long-term plans. Obviously, the Rona continues to play a major role in determining the economic recovery. However, it's less about the cases and more about the level of restriction. This forecast assumes that there are no large spikes, and they mention that this is a risk to their forecast. They expect the next 6 to 12 months to exhibit a prolonged dislocation of the labor market, and that the largest job recoveries have been in the heavily beaten down food service, accommodation, and retail sectors. And this is because almost none of the people in those sectors can work from home. They say the growth in manufacturing jobs also stalled in July, with a large share remaining either part-time or employed but not at work. However, the retail sector is under the most strain, with many bankruptcies looming. The biggest headwind to the economy is the drop in monthly income due to the expiration of the massive federal relief. They are referring to the $600 per week that was being paid out in extra unemployment benefits that expired at the end of July. Based on this, they expect the average household income to drop by 10%. The forecaster that's laying out their thesis put out their predictions for July, and you can see the results of their data. They were pretty far off on non-farm payrolls and just a little bit off on GDP, but overall they were in the ballpark. Moving on to worthy bonds. I didn't touch this account this week, but next week I will withdraw the current interest, which you can see down here is at $17.59. Looking at the interest report, I continue to make over $10 per week in interest, despite the fact that I withdraw the interest every few weeks. If you're interested in earning 5% yield on worthy bonds, which are both asset-backed and fully liquid, there is a link in the description that will get you one free bond when you fund your account. Looking at my taxable lending club account, the current total account value is $17,827, which is up just over $20 from last week. I had one more loan go into grace period, and I had 2 more loans go into the 16 to 30 day late period. 2 loans came out of the very late category, and that's because one of those did default and the other one was paid. I invested in A and B note loans this week, and looking at the term, they stayed just about the same percentages. I still focus on 60-month loans because my investment horizon is more than 5 years away. My weighted average is still over 16%, and I'm currently receiving just over 9.8% returns. Looking at total account value, it went up to $6,027, which is up just over $8 from last week. I have 2 additional notes in grace period, but one of my late notes from 16 to 30 days was paid, and one of my very late notes moved into the default category. Once it goes into the default category, I don't expect to receive any of this money, and I basically don't pay attention to it after that. In terms of investments, I did invest in a B and C note loan for this account, and looking at term, I still need to focus on 60-month loans for this one as well. This is an IRA account, so I basically can't touch it until I'm 60 years old, so investing in 60-month loans makes a lot of sense. I also have a little bit more risky weighted average at just over 17% in this account. My current returns for this account are just over 30%, but that's because this account is much younger than the other one, and I expect this percentage to come down closer to the 9% that I see in my other account. Moving on to my Fundrise account, you can see my all-time returns just eclipsed $1,000 since April of 2019. Looking at my historical graph, you can see the returns have really increased recently, despite the Rona. In terms of goals, I'm currently sticking to the $650,000 in this account by May of 2040, and my $500 monthly deposit will go in next week. Moving on to the investor update for the Charlotte area apartments. They say they have begun leasing their apartments out because some of the facilities are complete. They invested $6 million in the Capitol Club Apartments, which are luxury apartments in Indian Land, South Carolina, which is a suburb of Charlotte. They say they had some initial delays with the permitting process and a period of heavy rain, which revised the overall timeline. They expect the overall construction to be done by the end of the fall, and based on that timeline, the sponsor has started leasing the finished apartments. Once it's complete, 1, 2, and 3 bedroom apartments and townhomes will be available, and they believe the fact that townhomes and direct entry apartments could provide a particularly attractive location for renters. They say, as is typical with their construction investments, this investment is structured like debt, meaning that they receive a fixed rate of return for each month as long as the project takes to finish, meaning that the time extensions and delays will not negatively impact my returns as the investor. They expect the construction proceeds to yield a 12% return in the East Coast E-REIT, and as the project continues to near its conclusion, they view it as less and less risky. If you're interested in investing in projects like this that yield 12%, there is a link in the description that will get your investor fees waived for the first 90 days. Looking at my M1 Retire account for the last week, I'm up 0.48%, which is just a little bit higher than the S&P 500. $40.89 of that was market gains, and $8.73 was dividends earned. You can see it was a little bit up and down this week, but it continues to grow. Looking at the holdings for this week, tech was actually down for the first time in a while consumer, healthcare, finance, industrials, and dividend ETFs all went up. Short-term government bonds went down just a little bit, and that's because I think people are starting to take a little bit more risk in the marketplace. And as they sell out of these government bonds, the value of them will go down. Utilities also went down, which is a little bit strange, and real estate and telecom were basically flat. Looking at my dividend earnings for this week, Apple, Main Street Capital, AbbVie, Clorox, Costco, Main Street Capital again, and Realty Income Corp all paid out this week. My higher yield savings account actually went down 0.58% this week, and I also invested $26.80. Looking at the holdings for this week, again, short-term government bonds went down. Realty Income Corp also went down a little bit over 2.5%. Basically, all of the bonds went down a little bit. Again, I think people are starting to dip their toes into the marketplace, which means selling out of their bonds and moving into equities. All of the dividend ETFs here went up, except for the Vanguard Value Index, which stayed basically flat. Looking at my activity for this week, I had a $26.93 trade, and that was dividends that were paid last week being reinvested. On the 11th, I sold just over $1,000 worth of short-term government bonds to reinvest those back into the markets. And then on the 14th, I received a dividend from Realty Income. Moving on to Robinhood, it says I was down 0.35% this week, but I'm not really sure how that's calculated because my account value is at $18,129, and last week I was at $17,880. If you watched last week, I did have a pretty bad week, going down 1.3%, and I've made money since then, but it still says I'm down on the week. But moving on to my current positions, I have the August 21st Simon Property puts at $65. I expect these to expire worthless next week, but I will probably exit them prior to expiration. Looking at CrowdStrike, it had a pretty good run this week, up to over $100 after dipping down to $95. Again, I will probably look to exit this position next week. These 400 Apple puts are down to $36 from the original credit of $100. All of these put positions that are within 14 days, I will look to exit next week and then roll out in duration. Looking at AMD, they did come down a little bit this week, but this position is not currently in jeopardy. Looking at Match.com, they rallied at the end of the week, and then Yeti has been basically flat, maybe down just a little bit, and I actually have an iron condor on that position. Ford has continued to rally, and I may actually close this position next week. Snapchat also continues to rally, and then Uber calls, I actually had to roll these down because Uber continues to downtrend. This week, I also opened a Microsoft put at $190, and I rolled out my 3M puts to $150 out to that 25 September date. I also rolled out the Carnival puts to September 15th as well. Looking at my Tastyworks account, I realized last week I did not show you my account value, but I'm up just about $100 in this account this week. Looking at my SPY position, I currently have an Iron Condor between $330 and $337, and that expires at the end of next week. This one is a pretty risky play, and I will have to manage this one closely into next week. Looking at my Q's position, I have the $146 puts with a potential credit of $231. I'm currently sitting at an open profit of $132, so I might sit on this one at least until it gets down to about $50 remaining. Looking at CCL, I actually rolled this one out in time also, and it's currently at a $12 profit. I opened a Bank of America position, which is currently down $31, but I received a $65 credit for the $25.50 puts. Looking at Snapchat, I also rolled this position out when it was down a little bit, so I'm up $11, and I received a $134 credit to buy Snapchat at $21. Looking at Ford in this account, I rolled it up to the $7 put in order to receive a $26 credit because I am pretty bullish on Ford right now. Looking at my overall financial position, you can see my net went up by just under $4,000, and part of that is because I got paid this week, and part of that is because of market gains. My stock position also went up by 1%, and my bond position went down by 1%. Looking at my weekly progress chart, stocks continue to rise. Bonds went down a little bit because the bond market went down, as well as me selling out of some bonds. Lending Club went up a little bit over $30, and REITs went down almost $40. My trading accounts went up, and my cash balance also went up because I got paid. I think I want to keep it generally within the $8,000 to $10,000 range. And before next week, there are some bills that I need to pay, and I will have to reevaluate how I'm going to use that money going forward. Comment down below what you thought of my option positions or any of my passive investments. If you're interested in investing with any of these brokerages, there are links in the description that will give you some free stuff when you sign up. Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to the jelly. Today's jelly is another video from Charles Barthud, and he played the Mario theme song with various levels of difficulty on his bass. So here's what that looks like. Clearly, he is very talented with his bass, and I think he's probably one of the best bassists on YouTube right now. Comment down below if you think I'm correct or if I'm wrong. Definitely like and subscribe before you go, and have a great day.